saving you tax dollars and protecting your dollars. That's what we're going to be talking about today. Hey there, my name is Kenner French with vastsolutionsgroup.com, now vastassetdefense.com. Luckily, a blended company that now we're blended with Bob Bluhm of Asset Defense Team. So, man, things are going to be rocking, and we're going to be talking about really two major important things, and that's lowering your tax dollars, lowering how much you have to pay in taxes, and then also making sure that you aren't getting attacked by some of those, habitual litigants, those people who are slipping and falling in your property who want to come after your money. So we're going to be hanging out with Patrick Smith and also Bob Bluhm. Bob, let's get to you first. Bob, man, this is going to be a good one. You know why? Because we're going to be talking about protecting your assets, because so many people, are being attacked now. It seems like in the court of law, people are trying to, go after people with money now. It's a little scary. So your work even becomes more valuable. Thanks for being here.
Well, you're welcome, Kenner. Glad to be here. And you're right. We live in a very litigious society, and there are statistics that say there are more lawsuits and car accidents in the U.S. So it's very common. And one of the reasons is contingency fee lawyers will take a case. The plaintiff doesn't have to pay anything if they win or lose, so they can often walk away, not have to pay anything at all. And so why wouldn't they sue? That's exactly the rationale. That's what they're thinking. Why not sue? We might get some money out of this.
And that is such a bummer that people are taking the easy way out. They won't work hard, but instead they'll throw out a lawsuit with the possibility of making big bucks off someone else's hard work. But it is what it is, and that's why we employ people like you, obviously. And Patrick Smith, we're here. He's Mr. Save Money on Taxes. What's up, Patrick?
Hey, how's it going? Good to be here.
So let's get right to it. It really is. It's a pleasure having you both on board, because the people are really. I know there are people out there who are small business owners. A lot of real estate investors are going to be listening to this, watching this, who are going to be wanting to make sure that they're not overpaying taxes. Or maybe doing their fair share, but they're not overpaying their taxes. And I'm going to get right to it. I'm going to ask you a couple questions, Patrick, about ways to save some taxes. Really, if you're a real estate investor, or maybe even an entrepreneur, or maybe even a real estate agent, anything involved with the real estate world. So let's get right to it. So what's your number one, let's say, hack for lowering taxes as being in that audience?
Yeah, so in that realm, the biggest thing you want to be able to do with real estate in particular is really be able to isolate the expenses, and especially the buildings versus the improvements, and do segregation to really accelerate that depreciation and get as much bang for your buck as you can.
Yeah, it's crazy to me. A lot of people don't do that. They're not thinking, proactively in ways to mitigate the taxes as it relates to their investments. And one of the big ways is, I guess, bonus depreciation, et cetera. Can you go a little bit more in detail about depreciation as it relates to tax and real estate investing?
Sure. So in general, you've got any fixed assets that you purchase, you do expense those over time, called depreciation, based on the useful life of the asset. When you're looking at normal taxes, there's a Section 179 that you can use, and you get to expense usually up to over $500,000 a year, depending on when it was purchased in the year. And those are good for things like if you buy a $5,000 computer, you can expense the whole thing in the first year instead of allocating it over 5 years. In particular, real estate, where it becomes a big number is if you're buying $1 million building, instead of, for commercial purposes, it's normally a 39-year property. So if the value of the building's $1 million, instead of depreciating that over 39 years, you do cost segregation and figure out what your AC system is, what your internal plumbing is, electrical, and do a breakdown of that and segregate the cost. Mm-hmm. There's certain accelerated depreciation you can take on those and save, $10,000s, sometimes hundreds of thousands of dollars, depending on the numbers, much quicker than you could if you're trying to depreciate the whole thing over 39 years.
Yeah, that's a total hack. Why don't people take advantage of that? That blows me away. What would you say is the number one reason people do not take advantage of such tax strategies or tax hack, in my example?
I've seen two main reasons. One is people don't know about it.
Yep.
So that's just knowledge. And the second is it costs money to do those segregation studies. And they can be expensive, so you've got cash outflow up front.
Yep.
But even if you're paying, say, $40,000 for a cost segregation study, where in that first 2 years, if you're saving $200,000 in tax overall, that's still well worth your money.
Yeah, that's exactly right. Why wouldn't I spend a couple of bucks if it's going to bring me in a mountain of dollars? That blows me away. Speaking of mountain of dollars, let's go to Bob now. I'm going to go back and forth between you guys, which is kind of fun, actually. I'm going to be like watching tennis. Bob, so now let's just say someone's lowered their tax liability, and now they have a big chunk of money, and they're like in their 50s, and they own all their properties in their own name. What are your first thoughts there?
First thoughts are that we need to get those properties out of a personal name. The reason is you're basically operating as a sole proprietor, where you and the business are the same. And if the business gets sued, they're suing not only the business assets, or potentially take the business assets, but also your personal assets, because you have all of your eggs in one basket. There's no separation between you and the business as a sole proprietor, which is the same thing as owning properties in your name. So you have unlimited personal liability when you own real estate, investment real estate, in your personal name. So first thing to do is get it out of your personal name, get it into a protective entity, and sleep a whole lot better at night, knowing that you've limited your liability.
Yeah, I like to call it, putting a moat around your business, moat around your assets. Back in the old days, they used to have castles with, water around them, so intruders wouldn't be able to get to the castle. Sometimes they'd even have spikes, coming out of the water that would really keep away the intruders. And that's true, I would guess, of an asset protection plan. If you have a good asset protection plan in place, water with spikes, those intruders aren't going to even try to risk it. So likewise, an attorney who's looking at a pile of assets, if they know a good asset protection structures in place, they're not going to go after it. They're going to go after the next person who owns everything in their own name, therefore is an easy target. They're probably going to get their 30 or 40% contingency fee, right?
Yeah, and that's true, because the plaintiff's lawyers are looking for the low-hanging fruit. They're looking for the easy cases that they're never going to have to take to trial, and they're going to be able to settle at a high amount, and it's going to be easy to get at the assets. So if you make it hard, you make it difficult, you make it so it's going to take the plaintiff's lawyer a lot of time to figure out what your structure is, what goes where, who owns what. It discourages the plaintiff's lawyer. Now, these are for opportunistic suits where there's really no real damage. They're just trying to wring a settlement out of you, if you will.
Mm-hmm.
So yeah, you don't want to be the easy target. You want to be difficult to get at.
Yep, very difficult. So yeah, now it just hit me as I look at you too. We have a tax professional. Obviously Patrick runs the consulting division of VastSolutionsGroup.com, and now we have obviously Bob, who is with Asset Defense Team. Obviously now we've come together as a conglomerate of VastAssetDefense.com. Because I would think, because now the tax side is working with the legal side, if you will, estate planning, asset protection. So it's basically all under one house, working hand in glove. And I do know some clients are very happy about it. I would think most people would be happy about it, because now they could go, instead of going to 2 different places, 4 different places maybe, now they can go to just one place, so it's one-stop shopping. So I'm going to ask you two, let's ask Patrick, how important is that now we have it all under one roof? As an example, it just hit me. We have one client you and I were just talking about who was unbelievably happy that everything's under one roof, because he was going to a number of different places. So maybe you could bring up, without bringing up his name, kind of the thoughts behind that and how happy he, or maybe some of our other clients, will be because now everything's under one shop.
Sure. So I did want to touch on the separate legal structure. I agree with Bob 100%. That's absolutely essential. One consideration in that is just fulfilling legal requirements and making sure that business is a bona fide business, so it has separate accounts. You're not what they call piercing the corporate veil. If you're an S corporation, you have to have annual meetings, or C corp, that you're actually fulfilling all those requirements. And really, that's where hiring an expert or hiring a team of experts is essential, because that can keep you out of legal trouble. And it can keep your business in a way that is a lot harder to actually try to take the assets from the business and from the person.
Very good point. I should have mentioned that. Very good point. Leave it to Patrick to help correct my wrong. Thank you. You're right, Patrick.
But no,
Kenner, if I could interject for just a moment, this notion of a one-stop shop, having all services under one roof, is really something that can provide a lot of efficiencies because, to the extent that the attorney has set up the entity, we can more easily confer with the accountant. We can, share documents more easily through encrypted messaging. And it just makes it so much more efficient, so much more time effective in being able to serve a client, as opposed to well, who are you? An introduction to the outside CPA and explaining what the client is trying to do all over again. So it really can provide a lot of efficiencies.
Yeah, as a matter of fact, I was just talking to, I just off the phone with him, and he's a very high net worth individual, and he was working with he's working with an asset protection attorney, an estate planning attorney, financial advisor, and then also a bookkeeper and a tax group. So 5 different groups. And he was saying it was driving him crazy. He literally was going between each and every one of them, although he should have an assistant, but that's a whole nother issue. But anyway, he's glad now everything's going to be all under one roof because he doesn't have to go and coordinate all the different professionals. He's really going to be talking to one team at vastassetdefense.com, so it's going to be really easy for him. But anyway, Patrick, I'm going to also ask you from the tax standpoint, how important is that as you see it from on behalf of a client and also maybe even as a tax professional provider of those services?
Well, it goes exactly to what Bob was saying. If I, as a tax professional, have to go and chase down that client's attorney, and then the attorney's not going to talk to me without the client's permission, which makes sense. But then now between me, the tax professional, the attorney, and the client, we're all spending time just getting to a point where we can all talk to each other. Mm-hmm. And that alone just takes up a lot of time and ruins that efficiency. And so having everybody under one roof where once an engagement's signed, it's covering everybody and everything that's needed, then we've got those efficiencies. And just the peace of mind for the client is hard to quantify, but it's just absolutely helpful and just lets people sleep better knowing that all their stuff holistically is covered, mm-hmm. instead of always like that one client you're talking about with 5 different people having to go back and interact between different groups at different times. Mm-hmm. Just a nightmare logistically. So I love the idea of having everything under one roof. Yeah. Even for my peace of mind as the tax professional, yeah. It's nice to be able to go to a competent other professional in a realm that I'm not in and know that the advice that I'm relying upon to do my job is there, and just having that camaraderie and that collaboration absolutely makes that easier on everybody's side. So it's really a win-win-win. Or in the case of the 5, it's a 6-win scenario.
Yep.
Yeah, and if I could add to that, it creates a lot of efficiency because sometimes there's a question when I'm setting up an asset protection structure as to, there are different ways we could do it, but what's going to be the more tax efficient way? And so I can, more easily confer with Patrick and say, do we do it this way? Do we do it that way? What would be the tax effect if we did this versus that? And then we can serve the clients so much better by making sure that we're not only protecting assets from liabilities, but also we're reducing taxes at the same time.
I love it. That all totally makes sense, you guys. It really does. So, let's go back to holistic planning that Patrick mentioned and bookkeeping. I used to, wrongly so, I used to say, hey, client, learn to do your own bookkeeping first. Maybe as you ramp up, and then you turn it over. Now I believe that, people should employ bookkeepers. That should be one of the first professionals, they hire so they can have their books in order. So let's talk about books. So what's one hack as it relates to bookkeeping, Patrick, that you think adds value to the tax world, potentially lowering taxes? because they have good bookkeeping or clean books?
Oh, that's a huge component. So one, using tax or using accounting software that's efficient. So depending on the business, a lot of small businesses, QuickBooks Online, because one, you've got the bank feeds set up, so it feeds those transactions in. Two, you can set up rules to build those efficiencies so you're not chasing down information. Three, having it all in-house means if the bookkeeper has a question about how to categorize something or how to structure it, instead of waiting until January, February of the following year and chasing the client down for information, it's done proactively, and that way it's already structured. So having that, going back to the one team under one umbrella, it just makes that so much easier because it builds those efficiencies as Bob's talking about. Because we've had one client, for example, he bought a plane, and just having to deal with that after the fact is more difficult. Had he been a client at that time, and we could have proactively engaged him on that, it would have been so much simpler than having to chase down information months later.
Yeah. And it ends up costing them more money if there's not the one-stop shopping. Bob, what were you going to say? I think I might have cut you off.
Well, having good books, profit and loss statements, and the books in order is one factor, not the only factor, but one very important factor that courts will look at as to whether this is a real business or not, which leads to whether the court's going to pierce the corporate veil and make the owner of the business personally liable. So if you want to protect your personal assets, have good books, period.
Yeah, plus
It's one factor out of many, but you want as many factors in your favor as possible. So have good books.
Yeah. Well, plus as an
And that's
investor,
one.
hold on one sec, Patrick. Plus as an investor, all we are, entrepreneurs, they're just investors, and they might be an investor in selling their own widgets, as an example. But how do you know if that department or that endeavor, that LLC, is doing well unless you have good books? Because then you could say, this decision made money, this decision didn't. How do you know that unless you have good books? I was talking to the client that I was talking about before. This is no exaggeration. He hasn't filed his taxes since or done his books since 2006. Did you hear me right? 2006. How does he know if I won't say the specific investment, but how does he know if he's doing well? How does he know if his rate of return on his let's say well, I'll just say it's a doctor's office. How does he know if it's doing well? And he has another pharmaceutical type company. How does he know if he's doing well? He doesn't know unless he's got good books. Patrick?
Oh, absolutely. And like Bob said, that's only one component, but that's a huge component because it ends up, it can be the difference between running a business into the ground because of not having that good information and really being successful. I've noticed a lot of business owners look solely at cash and think if I've got cash in the bank, I'm good. What that doesn't factor in, though, if you've got $500,000 in the bank but you owe $800,000 to a vendor, then you're not cash positive, really. So just because you have cash in the bank at the time doesn't mean a whole lot. And it does to a point, but that's where you have to look and have good books, like you said, because without that, you can't really see the trends and really see where the business is, where it has been, and really forecasting to see where it's going. So those are all key components. And back to a moment for the piercing corporate veil, I've seen a lot of business owners like to use personal accounts for their business transactions. I can't stress enough that how bad of an idea that is. Get a business account. Get multiple business accounts. Really, each business should have a checking/operating account. Ideally, each business would have a cash reserve account just in case things go badly. And usually a third account would be a tax account just to put that money away before the estimates are due. And just being able to segregate that money, because going back to if a business owner is only looking at cash and they see $500,000 in the bank, that's not useful. It's not as useful as if they had three accounts. They had $100,000 in operating, they had $200,000 set aside for taxes, and they had $200,000 as cash reserve for any future plans. If they want to buy a building, if they want to hire somebody out of the blue that's just a superstar, and not having that cash flow is a huge component to that.
Yep, totally. I'm going to throw one idea out, a tax hack. I was just talking to this guy. He's going through a divorce. His at the same. Well, I don't even know why I mentioned that. Because it's impacting his net worth. That's why. Who knows? Maybe if Bob were around, he could have helped him in that regard. Um, uh, asset protection stuff. As far as a tax hack, I want to throw out my own idea because I was talking to him about a specific thing he's doing for some of the drugs that he's going to be marketing. R&D tax credits. Now, a lot of people, I think, walk over the idea without giving true notice to R&D tax credits. I think a lot of people are now doing, artificial intelligence, using it in their business, coming out with SaaS products, and a lot of people don't realize that, well, you get a dollar for dollar, depending on the circumstance, tax credit, sometimes at the federal level, sometimes at the state level. So that's one thing people should be looking at. Even specifically, we have a couple of real estate agents. They didn't even realize some of the money that they're spending as far as R&D research for their artificial intelligence could potentially be getting R&D tax credits. So what are your thoughts about R&D tax credits as it relates to a tax hack for small business owners, Patrick?
So my internet just blipped. I didn't hear all that. I did hear R&D tax credit, so I'll answer as best I can. One, I
just took a lot of time talking about R&D.
I know. Sorry about that. My internet decided it didn't want to hear about R&D today. But no, the R&D tax credit's very, very important, and it can save tons of money, like I'm sure you said. Be my guess at least. But yeah, it's very necessary to be proactive and really understand where you're going, because a lot of times it's based on the actual time spent with employees, and in certain cases with contractors, on what they're doing. So trying to go back after the year and hearing about R&D tax credits for the first time, at best you're making estimates. So really just wanting to understand, and that's where engaging a team that can be proactive with you and really looking at what you want to do and what your goals are if you're developing AI or custom software. That's just being able to plan that ahead of time and getting templates and getting reports in place to be able to report those and substantiate those, because the IRS will check those at times. So just making sure you've got everything in order is absolutely essential on that kind of thing, because it can bring a lot of money into the company.
I think you're right. I do think you're right. And I guess you said something very important, although it's just been a general theme here, prognostication or preparing or proactive, whatever the term is. I think that's very important as it relates to tax and as it relates to asset protection and estate planning. And I think now that, we're all one group, it'll be easier to do proactive planning. I often say, do you want to work with a consultant who's driving down the road 55 miles per hour, but they're looking in the rearview mirror? Well, here, April 15th, this is what you owe in taxes. Well, that's the same thing as, driving down the road, looking in the mirror, looking backwards. Well, really what you should do is proactive planning, prognosticative planning, looking forward. And that's true of driving at 55 miles per hour or also consulting. And I think that's kind of an overriding theme to a lot of the stuff we're saying. Bob, what are your thoughts about that as it relates to estate planning, asset protection, and working as one?
Well, very important, because the whole idea of asset protection is to protect from liability, lower taxes, and make sure your estate is well planned. So it's a key component of asset protection. We're trying to minimize taxes at the same time that we're trying to protect from potential liability. So I wonder if you or Patrick or both could describe the process that a client might go through if they wanted to engage vast asset defense to do just what you're talking about, and that is plan ahead for how to pay less in tax.
Yeah.
What would be the process?
Yeah, if it's okay, I'm going to answer that, Patrick. So there's a couple of different ways we could engage with us. One, they could come into our community. We have a new community called Vast Vaults, where they come in and they're actually going to be learning from such professionals as the three of us, some other people who can add value as far as, entrepreneurial elements, tax, finance, artificial intelligence, estate planning, insurance, investments, et cetera, et cetera. So that's one way, by the way. And by the way, that's only $29 a month. It's called the Vast Vault. Simple. It's a low cost. There's hardly any barrier. You get to be part of the community and learn from like-minded individuals. That's number one. Or number two, let's say someone does want individual consulting. Well, we have an onboarding or what we call a discovery call, basically, so we could understand your position, you as an investor, you as a real estate investor, as an example, or entrepreneur. And then basically what happens is then we really figure out what the best plan of attack for you is. And again, the most important component of that is proactive planning. We try to look forward to figure out what we could do, assuming we were meeting with you in 3 to 5 years. What has to happen over those 3 to 5 years for you to be happy, for the consultation, for your engagement to be a successful one? So it's a pretty painless process. It's funny in that some people think, well, wow, I don't want to meet with a tax professional. I don't want to meet with a consultant, a financial consultant. But truly, it's a process that's worth it, because if you're doing proactive planning, it could save you tax dollars, such things as the R&D tax credit, as an example. Or who knows, I'm working with someone on a captive where he's going to end up saving $400,000 in taxes. So it's really painless, but then again, it can truly pay off. So again, going back to what I was mentioning earlier, there's two basic ways to be a part of the community for someone who might want to just kind of learn and give us a touch, feel, and see what we're like while learning from the community. And then also they can do individual engagement, so they're learning about us and what we can do to help them in their during their journey as an entrepreneur going forward. That makes sense, Bob?
It does. Yes, it does.
Um,
That's good.
Likewise, I'm going to ask you. So let's say there's a client who they need a new estate plan. This guy. I'll keep picking on this guy, right? For estate plan, he needs a good estate planning attorney, asset protection attorney. How does he engage with your group?
Well, he can contact us directly, or he can contact us through Vast Solutions Group, and it'll land in our inbox certainly, and
Mm-hmm.
we'll be able to reach out and contact that person, and then that begins a process of finding out about the family, finding out about a discovery call to determine what are their objectives, what are their concerns, and then to address those through careful drafting and creating an estate plan.
Yep, that makes sense. On our website, we have a 3P process. It's, plan, make the plan for the client, if you will. Produce whatever is required or asked for in the plan, and then protect. The third element, really where you come in, is protect, making sure that the assets are protected, making sure that the plan is doing well going forward. So that's a 3P process, but it's much more simple than people think. But it's just adhering to it. Adhering to the process is really the most important thing, because everyone has I would say, generally speaking, a lot of people have good plans, but they don't adhere to the process, and that's really the most important thing. And I think that's sometimes what we do. I hate to say this, but I think we're good babysitters. That's a wrong term, but in my head, I'll use that. We're good babysitters of keeping people moving forward along along the entrepreneurial journey. I like that. I think that's the fun part when I see someone who I was thinking of. I was talking to a client just yesterday, actually. He came on board. His net worth was only $2 million, and now, I mean, it's somewhere around $28 million. I mean, that makes me feel pretty good about what we're doing. I take the credit. He thinks he is the one responsible. I take the credit. Just kidding, by the way. We have a few minutes. I'm going to ask one more tax hack. Patrick, if you don't mind me bugging you one more time, what's another tax hack that we haven't talked about that can add value to an entrepreneur out there? Again, real estate investor, entrepreneur who's worth whatever, $2 million as an example. What's another tax hack that you can think of?
So for anybody that's working out of their home, there's certain plans you can put in place to analyze your spend. So things like electricity, water, gas, utilities, phone, internet, things like that, and build a plan and really take some of those as business expenses.
Mm-hmm.
There's one that adds up. It's easier if, and that goes back to the proactive, it's easier if you set that up before year end.
Oh.
And the other tax hack is really tax planning. So talking to a competent tax professional before the year is over. Because if you come to people in February and let's say you made $100,000 on your new business, there's some we can do. But if you tell us that in October versus February, there's a whole lot more we can do with those months being in the year left in that tax year.
Yeah.
Let me ask this. We've talked a couple of times using an example of somebody with, say, a $2 million net worth. A lot of clients, I think, would fall below that net worth number. Is there a minimum that we would, that you would want to work with to help somebody get to a $2 million net worth?
Patrick, can I answer that? Let the big guy answer that. Once again, my name's Kenner. I'm with vastsolutionsgroup.com, just to throw that out there. I would say the Vast Vault. I think the Vast Vault is huge because it helps now open a whole nother market. Let me explain. I think entrepreneurs are, generally speaking, just not taken care of by vendors with respect to the small business owner market. I think they're forgotten about. And then even more so are the maybe beginning entrepreneurs, the startups, as an example. So one way that we're now attacking that is the Vast Vault. Again, it's only $29 a month, by the way, deductible. It opens up a whole new market, not only for us, but it opens up potentially the eyes of an entrepreneur who might not have a net worth of $2, $5, $10 million. They might be just starting out along their entrepreneurial journey. They're going to learn a huge amount of things as it relates to, well, asset protection, estate planning, financial planning, tax planning. They're going to learn a lot because there's going to be so much content in that group. It's going to be, I'll say, earth-shattering. I know it sounds crazy, but I'll say that because we're going to be giving a lot of content that's going to add value to someone who might not have $2 million, who might then, who knows, learn enough to end up having a net worth of $2, $4, $5 million down the road. So that would be my answer to that.
Good.
That sound good? I like that. I like the sounds of that.
Yes.
I agree. And I do, like Kenner said, I think sometimes that market's underserved.
Yeah.
And getting those people absolutely helps because we can help them get to those goals. And even the people that are worth 10 million today, if they had worked with us for the last 3 years, maybe they'd be worth 20 million. Who knows?
That's exactly right. And by the way, I'll also throw this out. We do have a free community as well. It's a little, it's going to be, we don't have quite as many resources or as much content in that group, but it also is called Vast Vault, a free community. But what I would say is, if someone's a brand new entrepreneur, they have no money, zero money, can't even afford $29, that might make sense as a matter of fact. I'm also going to make note of one thing, a tax hack. We only have a couple of minutes, but another tax hack. Let's say someone's a W-2 employee. Right? W-2 employee, they might be thinking about getting a piece of real estate as an example. Well, by the way, one of the best ways to, get rich, hopefully, is starting to invest in real estate, but also to invest in real estate itself by, who knows, an LLC. What happens is a lot of the activities that can occur in that LLC are tax deductible. You're running a business, so who knows? Maybe it's going to grow and grow and grow. Maybe it'll be the next Google or what have you, Century 21 or whatever the case is. But what I'm saying is, for a W-2 employee, a smart thing to do is have a side gig. I would say have a side gig in real estate because it's hopefully going to make you a lot of money and it's also deductible potentially. Patrick, what are your thoughts about that for a W-2 employee?
Oh, I think every W-2 employee should have a side hustle. I think really finding what your passion is and finding a way to monetize that. So with some people, they like to do coding on the side and just learning, building their own app. And you can do it slowly, even if it takes you 2 or 3 years to build something worthwhile. One, if you're passionate about it, it's not the same as work. I mean, it is work to a point, of course, but it's passion versus doing something just for a paycheck is a lot less fun, I'll say, and I've done it myself. So that's why I decided to become a CPA, because I enjoy that. I enjoy helping clients and really seeing the numbers. I worked in a call center. It was the worst job of my life. So I would not go back to that.
Yeah, I'm sure. We're very glad to have you at vastsolutionsgroup.com because you've added a lot of value to so many business owners. And likewise, Bob, we wouldn't have decided to align ourselves with someone unless we could completely trust them. We can trust our clients with you. And I know you're the man. You're the guy. I mean, you're a very modest guy, crazily so. Because man, if I were as cool as you, I'd be telling everyone I'm as cool as you. But I mean, you're back.
So,
You like that. You've taken some of the stages with some of the biggest name people out there. You know, you've been in law for years. You just don't toot your own horn. But I'm very glad we're aligned with you. VastAssetDefense.com is going to be a big thing going forward. Same with you, Patrick. I know that you are very good at lowering taxes, and legally, morally, and ethically, by the way. And I know you know your stuff in that you take care of the client, and you take care of the client within the bounds of the law and regulations, and you don't go overboard and potentially increase audit risk. So, I appreciate you both. This has been a fun time for me. I don't know about you guys, but is there anything we haven't discussed that we should be talking about?
I think you've covered it well. We've talked about reducing taxes, protecting assets from liability. It's a little bit about estate planning as well. So I think that covers the ground together. Good.
Awesome.
Patrick,
thoughts?
The only thing I'd add, I think small businesses, when you spend time as a business meal on actual meetings and work, take advantage of those. And the reason I bring that up is Taco Tuesdays. There should be a thing around the world.
A CPA with a sense of humor, ladies and gentlemen. Good stuff. I mean, kidding aside, that's another tax hack. We only a little bit went over deductions, but so many people walk over deductions. Not only R&D tax credits, but if you're having let's say as an example, you have an LLC and you're doing real estate, and you live in Washington State, and you want to take a trip to Florida. Who knows? Maybe you can go look at some real estate in Florida. What does that mean potentially? Depending on the circumstances, talk to your tax professional or talk to us at vastsolutionsgroup.com. But your flight could be deducted, right? What else? Your meals could be deducted potentially. Your car rental could be deducted. Your gas could be deducted. That's just one of the things to think about as a business owner, some of the deductions that a lot of people don't think about. So, enough about that. But what I would say is thank you very much for spending the time with me, you guys. It's been a pleasure. Also, for all the people who are listening or watching out there, we really appreciate the time. If you need anything, you want to connect with us, please do. VastSolutionsGroup.com. Again, VastSolutionsGroup.com. And once again, thank you, everybody.
Thank you.